Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you've joined us for today's Battery and Precious Metals presentations. Our next live presentation comes from Grounded Lithium Corp. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a meeting with Grounded Lithium, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Greg Smith, President and CEO of Grounded Lithium, which trades on the OTCQB venture market under the symbol GRDAF and on the TSXV under the symbol GRD. Welcome, Greg.
Thank you, Cecilia. And it's great to be here today and speaking with you all and sharing our story. It's a story we're proud of. We're a relatively young company, only been incorporated for 2 years, although the technical work started much earlier than that. We are a mining story. However, lithium from brine, it's all about subsurface fluid dynamics, which really caters more to the skill sets of oil and gas individuals. So what we've done is we've assembled a team from the oil and gas industry to exploit this sector. And we're very proud of the progress we've made in a very short period of time. We are built for purpose. The purpose being lithium salts as quickly as we can get them producing. And at this point, we're projecting to be on production in 2026 as we continue to expand and put out reports like preliminary economic assessments, etc. So let me expand on that. We always have to mention the disclaimer. We solidly believe in what we're doing, but at the same time, there are inherent risks in what we're doing that we must make people aware of. This slide is available on the presentation on our website as well. If you're going to form a company like us, you have to know where you're going. And the photo that you see on the lower left is a photo of at our first drilling rig as we were drilling for lithium from brines. And that's me and the other co-founder, Greg Phaneuf. We decided we wanted to build this as a resource company. We're not a technology company. We will find the right technologies for extracting our lithium, but we are pure and simple a resource company. And our vision was build a best-in-class, environmentally responsible Canadian lithium producer. And as most of you are aware, with the exploding demand for electric vehicles, that creates high demand on lithium. So there's a very interesting backdrop that we find ourselves situated within. And again, built for purpose, we went out and we've put together a team of proven resource development professionals from oil and gas that really understand what they're doing and how to get things done, because we move quickly. The team itself, we've listed some of the companies that we've been a part of and growing quickly, but we have a history of success. So at this point, with us only being 2 years old, from the perspective of the investor, we see ourselves undervalued relative to where we can get to, and we'll talk a little bit more about that, but we're young. So this is the team we've put together. It has all the skill sets. Me as President CEO, Greg Phaneuf as the VP Finance CFO, and he's also a director and a main co-founder. And then we've got engineering, geology, geophysics, and land. We have to have land to put together our positions, and we've been very creative as we've gone along assembling our position. We also have a solid board, and they all bring together strong board governance. They all sit on boards today or have been on other boards in the past. So they know what their job is, they know how to provide guidance, and they also bring similar skill sets. We have engineering, geology, finance, capital market skills within our board. We've got some advisors on the bottom of that list, and I'd like to draw your attention to the one at the top of the list, Wayne Monnery. He's a consultant to us. And he's a PhD chemical engineer that has also worked on DLE, direct lithium extraction, for other companies. So his expertise is crucial for us in moving our extraction process forward. If you don't know, this is representing what tailwinds are sitting behind us. So on this graph in the lower right, you can see how the price of a lithium salt has gone from $9,000 2.5 years ago to 75,000 US dollars per metric ton today. It's just exploded because of the EV market. This table on the left of that, adjacent to it, is showing that what we have happening is that the market is somewhat in balance today with the current demand and mines coming on stream. But by 2026, the demand is going to exceed the supply. And Benchmark Mineral Intelligence, which looks at this and is a leading authority globally in the market, points out we probably need 59 new mines by 2035 in order to meet demand. And that's a lot. We are not adding mines that quickly. So it's a compelling early entry into this market. Right now, the entire value chain is dominated by Asia. They are 10 years ahead of us. So they don't control as much of the resource. They only control about 35%. But in terms of the chemical processes, the anode and cathode construction, the battery construction, Asia dominates it. But having said that, we see efforts from both the Canadian and the US government to double down on this, growing these industries. They're focused on the entire value chain, starting right at the mineral and extraction. Canada is seen as a domestic source of supply to the US within their regulations. So we're well positioned to help meet that demand across North America. As I said earlier, we incorporated in late 2020, Q4. We've only been around a little over 2 years. We invested our own money and we started acquiring land based on our technical concepts, where we studied the geology, the hydrogeology. Where is the lithium brines coming from? How are they being sourced? So that we understood the picture and where we wanted to be, and purposely chose areas that offered competitive advantage. And that, again, goes back to our experience from the oil and gas sector. So in terms of land, we've gone from 35 sections to now over 300. We've done that through a number of creative deals, and you can expect to see more of that. In terms of resource reporting, we put out our first report middle of last year. And at the end of last year, we put out our second report. We needed the second report because, one, we had added more position, and two, we had drilled a well that gave us more data. We became a public company in the middle, or basically the September of 2022. And so again, relatively new to the market space. And last year we raised 10 million to accelerate us along our path. And so you can see what we've done here is moved very quickly from inception to where we are today. We've had the gas pedal down, and we will continue to have it down because we want to aggressively pursue getting to commercial production. It will require more capital, but we're very prudent. And because we come from oil and gas, we're used to investing and seeing a return almost immediately. This is frustrating for us because it takes years to bring these mines on stream. So if I had to describe how we fit within the market, we are disciplined impatience. We're prudent with our cash, but we want to get there as quickly as we can. Where are we located? We're located in the province of Saskatchewan, which is in the middle of Canada. And it's a great place to do work. If you go to the Fraser Institute, they rank Saskatchewan as one of the top 3 jurisdictions, only falling behind Nevada and Arizona. The area we sit in, because it accommodates and works with oil and gas from shallower horizons than where we are situated, they we have all the skill sets locally to service our industry right there. And we're on paved highways, we've got lots of roadways, lots of electricity, lots of natural gas. We have everything in the area that we need to move this forward quickly. And we have almost all year season access because of its accessibility. We're located in the Leduc-Duperow sequence. I don't want to bore you with the details, but 420 million years ago, this was the Great Barrier Reef of the world through Western Canada. And we're exploiting that geology today. The next slide will be a schematic cross-section to help illustrate why did we choose this area. The colorful section in the middle here, the purples dominantly, that's the Leduc-Duperow sequence. So as you move into Alberta, you have these independent growing reefs, just like the Great Barrier Reef off Australia. And then you hit the shoreline where you also have that carbonate reef growing, but it's attached to the shoreline, and it also gives you lots of lateral displacement to work with. We chose this area because after it was deposited, it was structured. We had the Rocky Mountains growing to the west, which caused that dip off to the west. And then we sit on an arch that was also forming in a similar time frame. And that makes us in the shallowest position. So what we were looking for was thick, porous reservoir for storing the brines, no oil or H2S in the brines, which you would find elsewhere within the Leduc-Duperow sequence in Alberta, and in the shallowest position. This was our basic premise, and our first well helped demonstrate, yeah, we nailed it. So if you follow what I just said, even though there's other areas that have lithium brines, we purposely chose, we're not going to go there because we want to be a best-in-class producer and provide the best economics. So we were very targeted in our approach to take us to this position we're in today. And today we control about 300 net sections, 300 square miles of land. And we'll show what that looks like here in a second. There it is. This is, of our 300 sections, there's 266 sections on this map. And we've done that through creative transactions. We will continue to do more creative transactions and build on that. An important thing to understand, though, is we can develop this from either a checkerboard or a contiguous land position. And I'll show you how we are doing that and planning for that today. So we've been aggressively pursuing getting our position together, and we now sit with a resource of 3.7 million tons of lithium carbonate equivalent across these lands. We've got a good start, and we're not done. How did we get there? Well, we're unique in this regard. From what I can see, very few people have brought in as much technical expertise into this that we are bringing into it. If you think about this, we don't just need high lithium concentrations, we also need good deliverability. And so to that end, we need to understand the plumbing under the ground. So we've done a lot of detailed work. We've got a three-dimensional model that's built that gives us dynamic flow representation from our well. But more importantly, with that three-dimensional model, we know how much reservoir and resources on every single speck of our acreage. It gives us a great insight into what we're doing. Production. Our first well, we produced with an electric submersible pump down the hole, and we ran it at different pressures, different flow rates, and we're able to put all of that into our model to predict how will this well produce through time. And what we can say from all of that technical work that we did is this well has the capability to produce easily at 19,500 barrels per day of brine. Why is that important? We need that brine deliverability number to plug into, if we're building a facility, how many wells do we need to fill the facility? So that's a good number. It helps minimize the number of wells that we have in running. This is our development plan, our first one. It's only 10,000 tons per year of lithium carbonate equivalent. We can go there because we don't have a lot of the pre-filtering facilities required to remove oil or H2S. An H2S facility alone would cost us $120 million. So we can become more smaller, more modular, and we have multiple analogs to be able to produce this on our land again and again. The red dots are our producer wells. The blue teardrops are our disposal wells, and our facility is located with that facility symbol in the middle. It's important because it sits on a paved highway. So for bringing in materials, removing product and sending to market, we're right on a highway, great access. And because this area also caters to agriculture, a lot of grain is shipped out of here and oil via rail. We have access to rail as well. So we're very happy with this development plan. But if you look at the pattern that we're putting in place, even though we have a contiguous land position, we're developing it checkerboard, which also fits in with a lot of our other acreage. So we're pretty pleased with the direction we're taking. Extracting lithium from brine is a process. The first thing to do is remove it from the brine. So we're producing it out of one zone, and it goes into an extraction facility that has a chemistry in it that actually removes the lithium from the brine and attaches it to basically a bead. The rest of the fluid passes through and goes back underground in a deeper horizon. That is then washed with hydrochloric acid, and you end up with a very dense solution of lithium chloride that goes into a phase where we're going to create the final product, the lithium salt. And the common product today that's sold is either lithium carbonate or lithium hydroxide, and we will be prepared to do whatever is going to be the most dominant demand in the market in the future. We don't have a technology defined today, but we are going to stand on the shoulders of giants. There's lots of companies out there that are inventing this process, companies with good reputations. And we've looked across the spectrum. We've hired Hatch Engineering, an international engineering firm, to work with our internal consultants and engineers to define which is the best for our brine. So we looked across the spectrum, chose 6 to focus in on. From the 6, we'll announce 2 that'll be our dominant players, and they will receive large volumes of our brine for extraction testing in the lab. And this is our well again, a drone footage. We did production tested it, and then after we production tested it so that we could see how hard we could pull on it, we saved large volumes of the brine. Each one of these vessels contains about 6.5 barrels of brine. So we're prepared to ship those to our top candidates for lab pilots. You got to love the ESG of lithium from brine. We're not a large open pit mine. We would never be doing the large evapoconcentration ponds that they do in South America to get the brine that takes years to get the product out of. We will have a small facility that's producing the brine attached to our wells, and it'll have a very small footprint. What can you expect to hear from us in the future? Well, you're going to hear about who are our top 2 candidates. Eventually, that goes to a lab pilot for each of them so that they can demonstrate what they can do. That'll then end in our final decision of who is our technology for extraction. The preliminary economic assessment is a major step in the mining industry. We're well underway in that. We need a resource report. We have that. We need to have a plan. We have that. We're just costing it out. And we need to know what our extraction facility will be. So we're well underway in terms of generating that preliminary economic assessment, and there'll be a number of news flow along the way as we get there. So we're hoping to beginning thinking about how are we going to do our preliminary sort of pilot facility out in the field. And that demonstration facility could start in this year. We're hoping that's our case. And at the same time, we're always looking for creative deals to increase our position where it makes sense. So you can expect to see more creative deals from us in the future, I believe. Capitalization, we're just shy of 69 million shares today. There are dilutives out there, including warrants priced at 50 cents, and so that's above market today. That's 50 cents Canadian, so more like 40 cents American. But we have those warrants out there that would bring in more cash into our structure. We like our story. We've invested in our story all along. We weren't greedy up front trying to give ourselves a bunch of free shares. Management has invested in this at every stage along the way, and we control 14%. We have institutions within Canada that own 17%, and then we also have retail investors that control about 69%. But the important point from this really is we're bought in. We believe in this story, and we're investing along at every step of the way. Just some key metrics. Market comp. Arizona Lithium bought another company in the Canadian space called Prairie Lithium. Most of the entities are trading in that $5 of EV per metric ton of lithium carbonate equivalent in the ground. Prairie Lithium sold for over $17. So that would put basically a triple on us. It would make us worth 63.7 million today. We trade in that range of 21 million Canadian, 22 million Canadian right now. So the other thing is, what does this look like for the future? And the future is grand. We know our costs for drilling, pipelining, and completing our wells. The facility costs we can estimate currently by looking at what others have published, and it's a fairly tight market. It's around 21,000 US dollars per ton of deliverable LCE to build one. So if we're building a 10,000 ton per year facility, that amounts to about 210 million US. So we know our costs, and when we build our costs up against, we only put in 20,000 US dollars per ton as a achievable price for our lithium salts. This makes money like mad. Current price of lithium is 4 times that number, 3 to 4 times that number today. So great metrics for us. And this is just demonstrating what we just talked about on that last slide. We see the potential for an immediate re-rate, and as we progress our story, this can go very high. So I'm trying to get through this quickly. This is our last slide, and just to wrap this up, we know what we're doing. We've done this before. We know where we're going, and we're proving this up every day. Our wells have established what we can achieve from the subsurface, and we're progressing rapidly, and it's still an early entry point. So we think there's a lot of torque in our story. And with that, I'd like to turn this over to questions, and I've received a number of them. The first question is, will you be able to participate in any US or Canadian government incentive programs to develop in this supply chain? And the short answer is yes. The however is we need to have a preliminary economic assessment done before we would qualify for that. So that's one of the reasons we're pushing forward on that story. We feel very comfortable in pushing forward towards that because everything that we've done to date is very technically robust. And that will shine through when we do finish our preliminary economic assessment. In terms of what we've said out in the market, in terms of the question is, how much money does the company currently have? Our last release was December. We had $3 million. And we do have a burn rate. We are spending money mostly on technical reports right now so that we can get to that PEA and doing the evaluation work on what technology will we be using. So we do spend money, but we see that money carrying us through till after we have a preliminary economic assessment, and then there's more available cash because that's a bit of a re-rate point in time from our perspective. Just scrolling through questions. Our expected grade right now is in our last well, we tested between 71 and 81 milligrams per liter. That's same thing as ppm. And that some people would consider that a lower grade, which it is. There are higher grades, but you have to be able to deliver the brine as well, which is why we focused on this area, because it had good grades, competitive grades within Western Canada, but it also had strong deliverability and in laterally continuous reservoir. So we're pretty happy with the resource that we have in place, and it's very accurate. And I think the catalysts that were on that next page, the catalysts, the question is, what are the catalysts? So from my perspective, the catalysts will be, first of all, we'll have announcements out on who are the top 2 candidates that will be receiving our brine. And at this point in time, we're just negotiating with those companies for the cost of their bench pilots. And you can see that we do have the brine ready to be shipped. We hope to be shipping that within weeks after we've finalized those agreements with those top 2 extraction technologies. That will then lead us quickly, we hope, to here's who does the best job, who has the best efficiencies, the best costs for our brine. All along the way, we will be updating in terms of what's our cost going to look like to develop our asset within the PEA. We will have resource updates because we'll be moving, we hope, from some of our resource from inferred to indicated due to our plan and the well that we drilled, as well as we like to be creative on how we get deals done to increase our acreage position, which would also increase the amount of brine that we have. So we don't make promises in that regard, but I can tell you we like to do them, and we're good at them. We have a team that's done many billions of dollars of transactions in this regard. So those would be some of the main highlights, but the biggest one is going to be the preliminary economic assessment, which we believe to be prudent. We're saying June, but we are disciplined impatience. So everybody in our team knows where we're going and that this is important and to get it done and get it done right. So we're pushing forward with that very hard to get that done as quickly as possible. Then we would be announcing how are we going to accomplish our initial facility, and that would come later in 2023. So we're progressing down all of those paths as quickly as we can, and we will be making announcements. Keep in mind, our real position is get to production. And as we progress through all of the steps that we see, and we have numerous steps to get through, we will be updating the market with those catalysts. And I don't see any more questions. And I think I'm pretty much close to being out of time. So I would like to thank everybody for their time. And I like the questions. They're great questions. And we're an open book. If you want to learn more about us, you can go to our website, www.groundedlithium.com. And our phone numbers are there. Our emails are there to me and the CFO. Don't hesitate to reach out. We're an open book. We love to answer questions as long as they're not somewhat confidential and not breaching the market conditions. So thank you.